Right, well, I think we are live. Good afternoon, everyone, or good morning, depending on where you're joining us from. Welcome to this Innovate Finance webinar spotlight event on payment innovation. A very warm welcome to everyone joining us today live, and of course to our panel, who I'll be introducing in just a moment. First things to say, the more sharp-eyed among you will probably notice that I'm not Hannah Dobson from KPMG. I'm Rolf Merchant, part of the team at Innovate Finance. Unfortunately, Hannah's had a few technical problems this morning, so at the moment is unable to join us. She would have been our moderator, but as I say, just struggling with the tech, which is very unfortunate, but I have managed to step in, and I will be moderating the discussion today with our panel. Very quickly, just to introduce the subject, obviously, payments is a massive area of innovation in financial services and FinTech. And we're very lucky to have some spokespeople from some of the absolute leaders in payments innovation today. We're going to look at some fairly broad subject areas within payments. Part of the reason we run these spotlight sessions is to take quite a dive into some specific areas of FinTech. FinTech itself is obviously a massive area with lots of subsets and different topics and areas of interest for everyone. So that's why we like to do these sessions and take a bit of a dive and have a bit of a mix of players as well. Now, plainly, there's been an awful lot of disruption in payments in the last 18 months. We all know that. But there's a lot of exciting stuff to come ahead as well. We'll be talking things like open banking and open finance, some different regulatory changes that are impacting this part of FinTech, and looking at things even sort of further more future gazing, such as crypto, which we'll be covering later in the session as well. But first, let's introduce our panel. As I say, we have an excellent cross-section of speakers from across the industry. We'll take it a turn one by one. Shall we start with Sarah?
Yeah, sure. Good afternoon, and thank you very much for the invite. Been looking forward to it. My name is Sarah. I head up products at Banking Circle. Banking Circle is a payments bank, so we are the heart of many of the payment solutions that you as a buyer or seller will be interacting with in your everyday. So our client provides the front end that you interact with, but behind the scenes, Banking Circle moves the money. So we're a fully licensed bank, and we use that license to connect to the clearings of the world, thereby bringing our clients as close as possible to the core of payment systems. We're pretty well established. We're on track to process some 200 billion euro worth of payments this year. So hoping today that we'll get a little bit into the core of payments as well, not just talking about the user experience. The reason being that there's only so far you'll get with the innovation of the user experience if you're building it on old systems and old rails. So I'm looking forward to that.
Fantastic. Thank you, Sarah. Ian, next to you.
Good afternoon, everybody. Thank you, Rolf, for having me here today. My name is Ian Mcdougall. I'm the Chief Commercial Officer at Yaply. For those that don't know, Yaply is an open banking infrastructure provider. So we're really in the business of enabling open payments and data in this new world of open banking and open finance, following the advent of PSD2. As a company, we're very much on a mission to enable better and fairer financial services for everybody by, in some ways, similarly to what Sarah just said, from a Banking Circle perspective, providing the behind-the-scenes enabling infrastructure and connectivity so that our customers can build, great new, financial products and services on top of our platform. So very much looking forward to the conversation today.
Excellent, thank you, Ian. Andrea.
Hi everybody. I'm happy to be here. My name is Andrea Aramoino. I'm Chief Strategy Officer for Contis. We're an exciting and fast-growing banking as a service provider. What we do is to simplify the way organization, which can be financial services organization or non-financial service organization, can embed payment solution into their own workflow and their services. And we do it by taking care of the complexity. So we're regulated in UK and EMEA. We are connected with the largest card networks. So we can issue cards, process cards, and make them connect to the payment rails. And what is really interesting for me is that there are so many trends that we can discuss today. And we discuss open banking, which will clearly participated into, but also in the crypto space, because it's another innovative area that we're doing quite some work on. So happy to be here and discuss further.
Thank you very much. Let's go to Anna next.
Thank you. Hi, everyone. My name is Anna Tsipko, and I'm the Chief Operating Officer at TomatoPay. Really excited to be here today. TomatoPay is a fast-growing startup that is powered by open banking, and we really focus on supporting SMEs, and our mission is to close the SME funding gap. And so our latest product is the TomatoPay app that makes invoicing and revenue collection super seamless for SMEs and sole traders by leveraging open banking and regulatory changes. And yeah, really looking forward to speaking about open banking, obviously, but also crypto, and just getting into how payments and payments changes have impacted SMEs.
Excellent. And last, but by no means least, Valeria. Ooh, has Valeria frozen there? Possibly. It looks like it. We'll see. We'll see. We seem to be cursed today. We'll see if we can come back to Valeria a bit later. But let's get started and get into some of the questions. So I did sort of hint at coronavirus, which obviously we can't seem to do any kind of discussion without at least giving some mention to it. I think as much as we'd all like to move on from the last 18 months, it is an unavoidable fact that it has created some big changes. I think if we make a start then and just sort of think about how COVID has sort of impacted the payment system in the last month, perhaps the last months, perhaps we can start there. I mean, what changes have been accelerated? Do you think? Perhaps I can start with you, Ian.
Yeah, of course. Yeah, look, it's the inescapable topic, isn't it? No panel would be complete without it. I think perhaps a fairly self-evident statement to make would be, I think undoubtedly the biggest change has been just the digitization of payments. So the shift from offline to offline, many years of advancement and progress has been kind of heavily compressed into a relatively small number of months. And so at the risk of looking for silver linings from something like COVID, actually what I think it's done is kind of stimulate and accelerate the trend that was already occurring. One of my kind of favorite statistics about this is actually related to my former employer, Stripe, the payments company, who during the COVID period have seen 2 million new businesses launch on their platform. Well, that was just in 2020, which was a greater number than were launched on their platform in the preceding 8 or 9 years. So I think it kind of embodies what's gone on well. I think what COVID has also done has highlight, I guess, kind of the greater need generally for payment efficiencies, especially for businesses, but for consumers as well. But if we stick with the business theme for a moment, here we're talking about speed of payment, instantaneousness, the ability to reconcile automatically. And generally, for SMEs in particular, and I'm sure Anna will, say more about this, for the SMEs to really have kind of real-time visibility into their cash flows. I think that's just become crucial in this COVID world where there've been all sorts of challenges. I think the other thing that's occurred is that we've really seen account-to-account payments enter the mainstream. I think this is fairly self-evident these days in terms of just the huge amount of investment and consolidation going on in the open banking industry. We see that everywhere we turn at the moment. Triple-digit growth across the board in terms of account-to-account payments because they're instant and they're cost-effective. And I think again, massive acceleration through COVID here. I think COVID's obviously accelerated I would say kind of the decline of cash usage, obviously, as well from a consumer perspective, especially in kind of mature digital savvy markets like the UK, like the Nordics, like Asia, where, the trend was already happening, but now it's gone faster. I would like to think that COVID has also sparked quite a great deal of innovation in payment, especially, including in the world of in-person payments. As we've come out of lockdown and, contactless and QR codes, et cetera, have become, far more prevalent. And again, I know, the folks at TomatoPay are doing a lot in this space in particular. I think we probably all experienced it in bars and cafes and restaurants, you know, the many, you know, new and innovative ways of kind of paying for things in person. And I think probably the last point that I'd make is that it's really just, I think, accelerated kind of the expectations around instantaneousness and real time. That's definitely occurred. And I know we're going to touch a little bit more on this kind of later on in, you know, in today's panel. And I think this is both an acceleration of something good that's happened, but it's also shone the light on the need for much more work still to occur within the payments industry and ecosystem to get more kind of harmonization and consistency when it comes to speed. So I guess they're, you know, the top thoughts of what I've seen anyway in the last 18 months.
Yeah, very good. Thank you. I think that's a great summary. And you referenced Tomato Pay there a couple of times. So I think it makes sense for me to bring Anna to latch onto some of those points.
Yes, absolutely. No, thank you. And I definitely agree with everything you've just said, just in terms of the proliferation of open banking. You know, at the moment, we're seeing about 5% of the UK population leverage and use open banking. The prognostics are that it's going to be 60% in 2 years' time, which is, you know, absolutely crazy. And it's great to see that. And I think largely driven by COVID as well. And in terms of SMEs, you know, it's very interesting to see that actually SMEs lose 1 in 5 customers if they only offer cash as a payment option. Yes, our research showed that, and that I found that quite surprising, that it's as much as 1 in 5. And so QR codes definitely pose an interesting alternative to that. We have seen the proliferation of that in terms of menus and just, you know, information. But actually our research also shows that, especially within the younger parts of the population, over 60% are actually really keen to use QR codes for payments and find that a more efficient and secure way of paying for goods and services. So I think we'll definitely see more of a trend towards QR code based payments over the coming months, again accelerated due to COVID.
Very good. Okay. I want to see if we can bring in Valeria, who's just had some line difficulties a bit earlier when we were doing the introduction. So just thoughts on this question, how in broad terms coronavirus has affected payments and disruption there, and obviously an introduction to yourself as well, if the internet gods are on our side.
Please, if I have still some problems, let me know, because I don't feel that you hear me very well. But generally, like, yes, first of all, I would like to introduce a little bit myself and what we are doing. I'm CEO of the company, and we created a payment platform for online businesses. And our platform allows to accept payments globally, but still stay as a business locally. It means that business with us, they can accept in different currency using different payment methods in different countries. And answering your question about generally about the COVID, for sure. First of all, we found that a lot of people, they start using more, for example, Google Apple Pay, and we saw really very big generally growth of such kind of payment options. And for sure, if to speak about online payments as a whole, a lot of businesses, they started using generally online payments as the key. And I think that it's really very important to understand that definitely during the next years, I think that the trend will stay the same, that the business will try to work with their clients in the different channels, and the importance of using online payments still will be quite high. And I think that the generally the influence also of online of open banking will bring the more the creation of new payment systems which will support open banking.
Yeah, no, very good. Yeah, I think that's interesting. Andrea, do you want to come in at this point?
Yeah, I think I agree with what everybody said. I think what I found interesting, especially in this COVID period, is the fact that clearly, as Ian said at the beginning, accelerated tremendously the movement towards a cashless society, where I think it's still, depending on countries, we're still far away from being a real cashless society, but really accelerated strongly the trend. And you can see two sides of the story. You can see the businesses, exactly as Anna said before, that they have to embed payments. So this embedded finance really took off, and with all the use cases you can see. And I think from the user side, what you see is like people are now more curious and also more open to explore different ways of paying that is digital. I mean, cards and payments through banking rails, it's the normal things, but they're also exploring different things. And we see I think especially in the more, like, say, younger generation, so they're exploring other digital assets and other things that are let's say coming up and becoming more popular as a way, I think, of exploring different ways, because anyway, cash is somehow going away.
Yeah, that's interesting. I mean, we'll come back to digital assets, I think, a little bit later. Lastly, Sarah, did you have anything you wanted to add to this point, just about COVID and its disruption of payments?
I think we've pretty much covered the accelerating trend in a number of different areas and payments. So maybe just to take a little bit the helicopter perspective, I think there's a truth that applies on a greater scale, not just to payments, but to businesses and even at the country level, which is that those who were already innovative, those who were forward-leaning and already had solutions that built on new technology, they did exceedingly well when the surprise event that no one foresaw happened. So businesses with a digital business model, a digital product, they saw their share price increase. I live in Denmark. We have very digital health system already, so I can go get tested in 10 minutes, 15 minutes later, the result is on my phone. I can show it at the restaurant and we can open society. And certainly we've seen also within our client space that's very sort of at the forefront of innovative payment solutions that our clients have done well. They were prepared for the surprise event.
Yeah, excellent. Well, that's a good summary, I think, at the end there. Yeah, I mean, plainly a lot to cover there, and a lot of, we could spend the whole session just looking at this, but we do want to cover other topics and look ahead as well. Well, if it's not coronavirus we're talking about in this country, it's a sort of big thing we're all grappling with. It's Brexit. Again, another topic we seem unable to escape of late. Wondering just very broadly, and we can sort of take this question in a few different directions, I think. But has there been a clear Brexit impact on the payment system and on payment businesses? And if so, how are businesses trying to manage these changes? I wonder who wants to kick off with that. I mean, perhaps Sarah, staying with you. Perhaps a sort of an EU perspective from Denmark might be an interesting one on this.
Well, then I think I'll start actually at a very low practical level. So if you're doing a payment instruction, all of a sudden there is a change if you sit in the UK. If you sit within the EEA, then there's certain information that doesn't need to be part of the instruction. Now it goes across border, that is no longer the case. So if I'm a buyer that sits in France, I'm buying something off of a UK merchant and I want to pay that through an account-to-account transaction. All of a sudden, I need to enter more information when I make that payment, which in and of itself creates a barrier for purchase. And on top of that, maybe my French bank now levies an extra fee because the payment has a leg outside of the EEA. So I think right at a point in time when account-to-account payments really accelerate, and you see this trend away from card-based payments onto account-to-account payments, not just domestically, but also across border, we see the UK being placed in a position where that trend may actually slow down when it comes to cross-border. So I think that will be very, very interesting to watch.
Thank you. Yeah, I think, Valeria, you'll probably have something to add here as well from a cross-border perspective.
Yeah, exactly. Because I think that the cross-border payments will become quite important part, because exactly as Sarah mentioned, that especially online business, they start in the UK, especially UK business, they start selling more in Europe, but also in other countries. But in the result, for sure, it could be the problem, not the problem, but the price of this transaction can increase still, like we didn't still it, but the changes will become, I think, that next year, as soon as such schemes such as like international payment schemes such as Visa, MasterCard, they are going to change their fees, and definitely it influence a lot on the business at all. But on the other side, I think that it will be quite good push also on the developing open banking, because from this moment, more people, they will start using payments from using open banking. But here are also like a quite important part, it will be to make the discussion and to decide generally how we will work also across Europe and across other countries, which like fees it will be and what will be the regulation, because like still PISP, for example, our also company is licensed as a PISP, payment initiation license we have. But if to speak about like this license, and still now, yes, we also like, it will be quite good to understand more clear if it will be possible to move money from like cross border payments from other countries, and if there will be some restriction, because still it's not applied like a quite clear rules even for UK-based companies how they can participate, for example, in SEPA, and it was also released that still UK-based business they can work cross SEPA, but still it's not clear what will be the rules.
Yeah, that's interesting. Perhaps for
if I may, Rolf,
yes, yeah, please, yeah.
The theme that seems to be kind of coming out there, I think, is like this idea that fragmentation is kind of the enemy of efficiency, so to speak. And I think this has been whilst we've seen some consolidation and some efficiency gains maybe through the COVID period, actually the Brexit period has had a little bit of the opposite effect, and it's taken us in some extents, just like the example that Sarah was giving, at a very practical level into a fragmented space, which is something that generally I think is a problem for the payments industry already and has probably been exacerbated here. And I think brings us almost inevitably, to the topic of, well, how do we get kind of better harmonization and kind of pan-European, and by that I mean EU and, the UK, for example, how do we get better kind of standardization there? And I think we're clear that in a range of areas, there's a role for kind of a continent-wide regulatory framework that needs to do better. We do genuinely believe that open banking, of course, has got kind of a role to play here, but equally post-Brexit, at a time when things were accelerating from an open banking perspective, then we saw the introduction of a little bit more fragmentation, licensing regimes, passporting, all of those sorts of things as well. So an unsolved problem, I guess, is the way I would describe it at the moment, but fragmentation is at the essence of it.
Yeah, that's really interesting. Andrea, please, yes, go ahead.
Yeah, just one thing. I completely agree. The fragmentation was actually something I had in mind that I was about to say. I think this also stretch into clearly the licenses and the regulatory framework, meaning that clearly you have now, if you operate in the UK and you want to operate in Europe, now you have to have a separate license, so being regulated somewhere else, so you can in a country you can passport the license. And if in Europe, you have to do the same, apply for a license in the UK, which then therefore is going to knock-on effect on multiple cases, or delay on being able to offer service to the clients that you were already offering services before, basically creating some sort of a long waiting list for regulators to go to application that we're not expecting before. And that create an effect, which is basically a delay in providing service to the end user.
Yeah, very good. Anna, perhaps final thoughts from you.
Yes, absolutely. I mean, I guess, again, zooming out a bit from payments and focusing more on just the business's experience of doing cross-border transactions, there's now also a big question mark around VAT liabilities between European countries and the UK. And especially for, again, smaller businesses, navigating that becomes really, really quite complex. And when it comes to calculating their taxes and making their tax payments, there's been a lot of progress that's been made on that front. A partner of ours, Untitled, they've been doing really well in leveraging open banking to do tax calculations for sole traders and small to medium-sized businesses. But now that Brexit is introducing these complications, it again makes that a lot more difficult, and as a result, more difficult for businesses to really get a proper grip on how much they actually owe and how to manage their cash flow.
Yeah, very good. Yeah, that's a good summary to end. Let's move on a little bit, and I think actually perhaps we can start sort of diving into some slightly more specific areas. And this is one thing I know that Sarah's keen to talk about, which is on the merchant side, faster settlements to merchants. Sarah, I'll address this one straight to you, but everyone else, please do chip in. What's kind of happening in this area? And as I understand it, there's sort of there's newer payment systems and there's sort of new take up of that. I think a good summary of what's sort of happening on the merchant side and faster settlements there would be really interesting. So yeah, tell us what's going on there exactly.
Yeah, absolutely. Let's maybe start with a little motivation. I think the request to move money from the buyer into the hand of the seller is one that we see from most, if not all, of our clients. And I think the logic behind that is kind of obvious. If you're a business, efficient liquidity management, working capital management, that's going to be key. Maybe the most obvious example is if you go to the gig economy, take the driver who provides services on a lift sharing service. When the passenger leaves the car, if the money can arrive immediately on his account, he can drive to the petrol station, fill the car, and get ready for the next customer. So that's really sort of the ultimate example of why this is at the forefront. This question is relevant when it comes to account-to-account payment methods, because that's where you can move it almost instantaneously. And there are a couple of interesting developments going on at the core of the payment systems that really, I think, are going to accelerate this trend or the ability to deliver the instant settlement. One of those is what's going on in real-time payments. And the other one is the request to pay that's being introduced. So if we take real-time payments first, within Europe, the reality up until now has been that, yes, we have instant SEPA payments, but that is a little bit of a disconnected setup. So if you bank with someone on the Iberian island and you want to make an instant payment to the Netherlands, maybe not so much because there are different providers in those two regions. But now what the ECB has done is that they have stipulated that if you do SEPA instant, then you have to be reachable via the TIPS setup. So if I now bank with someone who's able to send an instant payment through TIPS, then I can reach anyone within Europe pretty much with an instant payment. And the ability to do that, if you choose the right banking provider, is obviously going to accelerate the ability to deliver that instant feeling. So I think that's one very interesting thing that's going on and going to come into effect, I believe, on the 26th of November, late November anyway. The other interesting thing going on more at the core level, I think, is request to pay. So for those who don't know, request to pay is a messaging system. So basically the way it works is that I buy something from a merchant. That merchant immediately sends me a request to make a payment. I enter my bank, my phone number that identifies me, say, go ahead. And that immediately triggers my bank to then send the payment off. So no sort of hassle around putting in the payment details, no lack of certainty around whether it's going to happen or not. The payment's going to happen. If the bank is on the instant rails again, it can happen immediately. So I think both of those are really great examples of how also on a regulatory level, things are happening to really promote change that ultimately will spill over into our user experience, whether we're a buyer or whether we're a merchant wanting to be settled quite quickly.
Yeah. Okay. Yeah. Really interesting. I mean, those are some big changes, and very very soon to be very soon to be reality if we're talking end November. Other panelists' views there on tips on merchant settlements there.
Yeah, can I also add? Because for sure, I also can see that all the payment schemes, they are moving to faster settlement, because it's really crucial for a lot of businesses when they cannot receive their money much more faster, because we also understand that the gap between sales and money on account, now it can reach also 5, 10, 7 days, depends on. And that is why it's really a very important part in the payment world. And from my opinion, definitely SEPA moving, also as we know, SWIFT, they also now develop a new one features where you can apply and you can also make much more faster. But I think that it's still we will see more new one payment schemes which will collect together the cross-border payments, because still it's quite complicated question, and still it's not solved the question related to cross-border, because even we mentioned that SEPA is moving, but SEPA is only one payment scheme, which support just euro. And but if to speak about like even across Europe, there are a lot of different currencies which is not supported by SEPA, and still like the gap between like amount the date will be quite the same. It will be again like from 2 until like 5-7 days. That is why I still can see that this gap and an opportunity for a lot of companies to build, like to put together different like payment schemes and to create again like cross-border platforms for payments, which will speed up the process of the settlement to merchants.
Yeah, exactly. Anna, I can see you nodding there.
Yes, no, I guess from my perspective, you know, obviously these regulatory initiatives and large-scale changes are absolutely crucial in creating more of a global economy as well. But it's also important to look more, you know, more inward or small scale, right? And if we look at the UK, for instance, you know, the faster payment scheme is well established, has been around for a bit now, but still within card payments, and a lot of merchants, right, still heavily rely on card payments. The settlement timelines still tend to be what, you know, 1 day at best, 3 days, 7 days, really impacting merchants, or otherwise looking at businesses that you know, collect revenue through invoices. The sheer late payment of invoices through customers leads to the fact that, again, especially smaller businesses cannot really pay out themselves, their owners, and so on. So whilst the large scale, you know, regulatory change and innovation is important, I think it's also really important to push for trends that are more kind of business related, customer related, and making sure that we really get into faster settlements on that front as well.
Yeah, that's a really good.
I really agree with what Anna's just said there, to be honest. I think, you know, again, she's describing inefficiency, right? It's legacy inefficiency that exists, you know, in various, you know, rails and schemes and methods of money movement, and nobody wins really as a result of that being there. It's systemic just because it's always been there, and the reality is that we have methods and technology and capabilities these days to do much better as a payments industry. So it's great to see that starting to happen. Frankly, you know, that rising tide lifts all boats. And so I think as an industry, you know, we really all need to be, and I think largely are, kind of unified towards that, especially amongst, you know, more innovative companies.
Yeah, very much so. I think I'd absolutely echo that. Andrea, any final thoughts from you?
No, I think we all talked already about it's great initiatives, and I completely agree that the problem is outside Europe or within countries got different currencies, because when we talk to, it's great to be able to do a real-time settlement, real-time transaction, you know, within the same kind of ecosystem, but then there are still problems like sending money from here to Australia that is going to still take like X many days, etc. And these are things that have not been addressed as yet. Hopefully, you know, we can apply the same principle we're applying here that we've been discussed, which is good in Europe, also to external larger frameworks, let's say.
Yeah. Well, there's a challenge then for the future. Before I move on to the next question, I just want to remind the audience that there's the option to ask questions in the little dialogue box. We've had a couple in already, but if you've got questions, which we'll try to address, hopefully 2 or 3 towards the end, please do drop a question for the panel. But moving on to our discussion, next we've got a very big question here, again, this one probably could warrant a whole webinar, maybe even 2 in its own right. But it's about open banking. So the question really is, what will be the likely impact of open banking on the traditional banking system, if we can call it that? Obviously, we're starting to think about open finance, the sort of next stage of data sharing in this country and in others. What might we see? Could we see the disappearance of cards as well as cash? And then I suppose a sort of bolted on question would be how will traditional banks, the traditional system, remain relevant when consumers are demanding change and sort of better services all around? So some big questions there, but perhaps we can sort of start just thinking about, you know, open banking itself and how that might change the payment system. And Anna, let's go to you first on that one.
Okay, yeah, thank you. I think, you know what, let me say something about the traditional banks first, actually. And if you look at their business model, I mean, obviously at the core is taking and holding deposits, it's facilitating payments, and it's ultimately facilitating loans, where ultimately that's where the banks make their money. And if we link that back to open banking, I think that the smart banks, what they're going to do is they're going to leverage the changes in regulation and the fact that lots of new innovative TPPs are starting to emerge, to find ways of still focusing on their core business areas without having to win the customer experience battle, because clearly they're lagging behind. So I think the way for banks to remain relevant is through fintech partnerships and through embedding themselves more in the kind of day-to-day operations of their business customers and day-to-day lives of their retail customers, with open banking players that can leverage that data in a significant way, and that can ultimately, you know, lead on the customer experience. So we recently launched a co-branded app with Santander, and that's exactly what we're trying to achieve there, right? Where we're taking their their core competencies around lending, for instance, and their core competencies around ultimately making payments, and their big customer base, but leveraging our abilities to provide best-in-class user experience and to really make the most out of open banking data and also open banking payments. So yes, I think it's really it's partnerships, and it's being relegated more to the more infrastructural side of things that will help banks remain relevant moving forward.
Yeah, that's really interesting, and it's good to have that big picture. And yes, partnerships absolutely vital. I think, Ian, this would be a good point to bring you in, because I know Yapli has a lot to say about this. So go on.
Yeah, you could obviously tell that I was itching. I agree and disagree, actually, with what some of Anna's just said, to be perfectly honest. I absolutely agree, anybody would, that, you know, we're in the new world, and, you know, those banks that kind of adapt and, you know, participate and innovate, obviously, you know, will be the ones that thrive here. I don't know about I'll be honest, I don't know about the relegation to the infrastructure side of things. I don't think this is a win-lose scenario for, you know, the challenges in the upstarts and the banks, for sure. And partnership will be part of it, but actually, you know, a lot of it is also going to be around just kind of how the banks can get their own act together themselves. And I believe many actually have the ability to, you know, to do it in-house or to do it themselves. But I empathize, right? Because you know, this is something, open banking is something that the banks have had done to them. I agree, obviously, that it was required and is the right thing for it to be happening. But again, you know, it's a long-standing industry that's been a pillar of, you know, the economy and societies and so on for, you know, decades and hundreds of years in many cases. And so, you know, we need to be realistic about that. I think our focus as an open banking community should be on making the traditional banks kind of better and helping them to kind of thrive commercially through this. And, you know, we're already seeing it, right? Some banks get it. Some are saying, right, we've got over that initial, we don't want this thing to happen, to, okay, now it is happening. And actually there's opportunities for us to, you know, to thrive and make money and ultimately do what I think, you know, the banks are the legacy banks are traditional banks, I should say, are most worried about, which is kind of losing the customer relationship. I mean, this is totally analogous to what we've seen happen over the last couple of decades to the telco industry, right? Where the large incumbent telcos owned the customer, they owned the products and services. They were probably a bit slow to innovate. Service and support was not good. And then they just got totally blindsided by the internet. They became providers of plumbing, and all the value is captured by the over-the-top services that ran over the top. And there's a real risk for some banks of that happening here as well. If I was a large bank, I'd be trading on the thing that I think I do best, which is ultimately, and this might be a controversial statement, is kind of the holders of trust. And I know that'll raise some eyebrows, me saying that, but generally speaking, what banks do is they're there through kind of, crisis and Armageddon and everything else, that the banking system generally continues to kind of thrive and operate. And I think, I probably they're saying the same thing that Anna's saying in terms of, deposit taking and, reliability and, my money is safe and I can get access to credit and so on. They need to do it better. But if I was them, that's what I'd be, that's what I'd be trading on. So I think there's something broadly in this theme of, what is the role of the banks to play in the future? Trust, actually, I think is going to need to be a big part of it.
Interesting, yeah. Comments on trust or on the question around maybe something on what's the future of cards? Never mind cash.
Can I just also add a little bit? Because I think that also open banking was created as an idea to simplify the life of individuals, of business. Because in the result, the life of our individuals is so complicated when they try to onboard or to use some services. That is why, first of all, the open banking, it is a great opportunity, again, to develop competition. And it doesn't matter. We cannot separate banks and just financial institutions, yes, like money or others. The most important it is that all of us, banks and the FinTech company, we must focus, first of all, on experience and services, which we are building for individuals and for the client, and not to decide who are better or who is worse, but to make really great products for individuals. And that is why it is our goal to cooperate together, a FinTech company and banks, and exactly to trust each other, but to bring on the market in new products. Because in the result, to be fair, I think that all in the result, individuals, they don't understand what is the difference between open banking and just payment from account. They don't know. We just need to represent them as a quite simple way of the payment, and for the business, just the cheaper way of the payment. And that is why I think that for sure, as historically banks, they built a really big infrastructure for payments, and according to regulation, PI, we must keep our accounts in banks. That is why, in the result, we cannot compete because we must cooperate with each other. And I think that it is important point that everybody must understand that we need to cooperate, trust each other to bring better experience and better products for the end users. And the end user, it is business and individuals.
Yeah, that's really nicely put. I'm a little bit conscious of the time, and I'm wondering if we should probably best move on to our last question before opening up to the audience questions. And we have got a few queued up, and I'd like to see if we can address them if possible. The next question is another big one, and I felt like we can't really do a session on payments without talking at least briefly about cryptocurrencies. And Andrea, I think I want to go to you on this question first. We have actually spoken about this in the past on our podcast, I think it was. So maybe just some overarching thoughts on what impact you think cryptocurrencies might have on payments. Are we seeing it already, or is it likely to fizzle out? What do you think?
Thanks. Yes, I think what we've seen with COVID, now going back to pretty much on the first question, is there's been an increase and an uptake of in cryptocurrencies. So more people, especially more in the younger generation, actually curious and trying to get into understanding what these cryptocurrencies really are. Now, when we talk about crypto, typically we should talk more of a framework rather than specifically Bitcoin, because you have the typical crypto assets like Bitcoin, and you have the Ethereum and smart contract type of assets, and then that actually create all sorts of other application, like the DeFi and the smart contracts is pretty much an alternative way of doing finance, which is different from the traditional finance we have, and then the NFTs coming up, etc. For example, what happened with us and our experience in our business, we are launching crypto cards. The concept of crypto cards is that there are a lot of people, clearly they have a crypto wallet. Now, overall, about $2 trillion are actually stored in crypto assets around the world as of today, more or less. And there was an FCA stats from a couple of months ago that said that in the UK alone, there are at least 2.3 million people that have got a crypto wallet. And probably this is on the conservative side, but probably it's actually even more, but it's already a big number anyway. And most of these people, they want to use the proceeding. Some of them want to hold, in the traditional, pure traditional concept of crypto, but a lot of them, the vast majority, want to use them and spend them. And the best way, because not many merchants are yet accepting crypto, then the best way to do it is to use some of the available network, which is, for example, the card networks, and be able to give a card that on a point of sale, you can basically in real time convert the crypto assets into a fiat assets and make the payment. And that's been super interesting. We're seeing that the average age of the crypto card user is actually lower than the average age of the traditional cards, and typically, it's on the 30-ish years old type of mark, it's kind of lower, and the amount of spend is actually tend to be lower. And I think it's tend to be, I'm assuming it's because it's more like for more trivial things on the day life and more spending on your day. And that's interesting because what I see, going forward is like there will be bigger impacts. I mean, more crypto exchanges are going to have a card, but then also more businesses are accepting Bitcoin. That in Switzerland you can pay taxes in Zug County, in the Zug Canton in Bitcoin or Ethereum. And I read that PwC, I think maybe Anna can confirm that in Hong Kong they accepted already payment Bitcoin like 3 years ago. So this is happening. Some clients are asking for it, and then you will see that this stablecoin coming, which is a problem, fixing the problem probably of making a real-time settlement. You don't move the asset, you have to move a tokenized version of it. Mm. And then eventually you go, the last thing is that you got the central bank digital currencies. There is a stats from the Bank of International Settlement that says that more than 80 central banks around the world, which is cover more than 90% of the world GDP, are actually doing a project at some sort of different degree of completion about this asset. This is going to be completely different because it's going to be based typically on DLT. So all the traditional rails are going to be sort of migrating actually to a DLT type, which is already open by definition. So it's started open network instead of open something that's closed historically, which is the banking one. And so it's quite exciting, I think, what's going to happen going forward.
Yeah, undoubtedly. And as you say, there's lots of different elements to it: stablecoin, CBDC, and cryptocurrencies like Bitcoin and so on. Any other views on crypto, on digital money?
I think these examples are at the same time good examples of this moving, but also good examples of this not being very far yet. So there is still a long time till I go on Amazon and I see the price in Bitcoin and I pay straight from my Bitcoin wallet. What's happening today is very much solutions that are bridging crypto with fiat. And you have kind of at least two camps. You have one, which is the early adopters, the crypto enthusiasts who want to spend their money where cards is a great solution. And then you have another set of services where crypto somehow facilitates something and makes something possible. Remittances is a great example of that. So remittances traditionally, especially if you want to send money to a third world or developing country, expensive. It costs a lot in FX and in the payment. So crypto becomes a way of facilitating that, but you're still taking the money from fiat into crypto on the sending end. Then you use the fact that crypto can move it efficiently into that receiving country. On the receiving end, it still goes from crypto into fiat. So we're still very much in that bridging environment, which I think is a sign of the early days and very far from that being, the means of payment per se.
Yeah. I think that's really
what Sarah just said. Is a very, very accurate assessment of it. I mean, unstable coins, for want of a better term, are as a payment method, highly problematic for all the reasons that we know around volatility, delay, et cetera. I think, stable coins, be they CBDCs or private, feel much more like, the answer to, is there a problem to be solved? If there is, then that feels like it might be the answer from a payments perspective. And obviously we need a way in the world of, exactly as Andrea said, in the world of smart contracts and, blockchain-based ledger systems and so forth, we obviously need a mechanism to enable payments and, transact value. But I think, unfortunately, we're quite a long way away from, seeing the actual answer and use cases and so on around it. So.
Very good. I think, there's more work to be done here for sure. Now we've got about 10 minutes left. I really want us to try and field some of the questions from the audience if we possibly can. So I've got one here. This don't know who's from, anonymous. Does developments in RTS, real-time payments, spell the end of card payments, or will they operate in tandem? Who wants to take that one?
I'd like to give that a shot. I think it will certainly accelerate the development. Look to the Netherlands. In the Netherlands, they have Ideal as a payment solution. It is account-to-account based. It is super low barrier for everyone to use. More than 60% of their e-commerce is settled through Ideal. So I think that pretty much just showcases what happens when it becomes convenient on the buyer side and cheap and convenient on the merchant side as well. So yes, I think it may not end card payments, but it will certainly accelerate the trend towards account-to-account based.
Yeah, and end is a big statement, but take us closer to the final point. Yeah, look, I agree. Again, it comes, retail environment as well. It comes back to what is the problem that cards as a method of payment are convenient for solving, and there are many. That's why we've had cards for so long. The entire ecosystems are built on it. But what we're seeing now is the acceleration of actually more efficient and more cost-effective ways of achieving the same outcome.
And I think that's especially true for e-commerce, right? Sometimes in face-to-face interactions, tapping a card might still be the most efficient way of doing things, but having to type in your card details when you're shopping online, having then to go through SCA, it's not the most efficient journey. And yes, obviously with the adoption of things like Idealo or also support in Germany, we are already seeing that it has been a very popular payment method by consumers in conservative markets like Germany. So there's nothing really to stop that development further.
Yeah, nice.
But it is exactly depends also on the users and if they prefer to pay, because still we cannot compare UK business with the Netherlands, because Ideal, they built their system not last year, and the difference that penetration of card payments in UK is really very high, and people, they prefer using Apple, Google Pay, also card payments. That is why definitely the movement on the A to A kind of payments will be, but also depends on the quality and for the end, for the merchants and also for the individuals of the product. Because if it will be, will have really very good user experience, and if it will be quite good for merchants, for sure they will use. But if in the result it will be not so secured and have some trouble, we understand that it will not work.
Totally confer. I think that there will be a lot of sort of country-specific elements. Another one that I think maybe we haven't talked so much about is the consumer protection aspect. Some countries are more conscious of consumer protection, and in those countries we may see it further from actually happening. So where I am, actually today, the new solutions still in the background rely on the cards, because the cards have inbuilt consumer protection. So there are many different country-specific aspects, I totally concur, that will determine whether it happens faster or more slowly in individual countries.
Yeah, that's interesting. So there's an opportunity for certain countries to sort of get ahead of this if they choose to regulate it in a certain way. That's interesting.
Well, like anything, we want to take we want to have the best of all these worlds, don't we? We want to take the best attributes of each and bring them together into something that's a little bit kind of more ubiquitous and streamlined. And I think that's already what we're seeing happening right now.
Yeah, very good. Okay, got another question here. This is from Richard at company.com, and he asks, how is the payments industry tackling the growing KYC requirements for individuals and businesses? So know your customer. Anyone want to have a crack at that one?
Oh. It's a harder one to answer for me in particular. I mean, we don't sit in that place in the value chain. Our clients are handling the KYC. So I think that's a harder one for me to comment on.
I'm happy to comment on a little bit. We play somewhat in that space. Look, I think KYC in this world of kind of remoteness and online and all of those sorts of things when it comes to payments in particular has become a more important topic. It was already important, but it's become even more important because the opportunity for nefarious behaviour in the virtual world is more substantial. I think what we're starting to see is that there's this, again, on the topic of efficiency, there's a certain inefficiency from everybody in a distributed way trying to do kind of KYC on individuals and businesses. And what we're starting to see is maybe coalesce a little bit more around expert organizations who can do it at a scale and therefore at a quality better than if it kind of gets distributed out to everybody that has a KYC requirement. And so I think reliance models around KYC are going to become more and more important, that's for sure. And I think, what we're really seeing is the huge benefit that advanced technology can play in kind of streamlining and automating KYC processes, from facial recognition, open banking. Again, I have an obligation to say that obviously as well, but it's a core aspect of streamlining the efficiency of access to information and data generally that can serve many purposes, and frankly KYC is one of those as well, where it comes to something as simple even as just verifying that the person does actually own the bank account that they say that they own. Now, that's just one aspect of the KYC process, but so there's organizations we're starting to see now really bring together, the kind of those best of breed components into, really, really solid KYC solutions.
Yeah, maybe I will also add, because we work with online business, and we touch and we know that it's really KYC, it's really important part and the most important, because on the one hand we have requirements from central banks, from regulators about to check everything, and especially across Europe, when you start onboarding your clients and they are based in the different countries, you need to receive and find accesses to different database just to make KYC, KYB, because in the result, as we are working with a business, we need also to make KYB, and it takes really a lot of time. And sometimes, unfortunately, clients, they don't understand why they need to provide so many documents, and that is why it is we have a hope that hopefully open banking also will bring on the market the simplicity of onboarding, because in the result, banks, they have a lot of data about clients, and they have already onboarded, they already checked, and if it will be some cross-checking, and also it's about regulation, if it will be possible to use the data which has already received by some other bank, and it will be enough for KYC, KYB for onboarding. It will be simplify, first of all, the life of clients, because they, unfortunately, in the result, as we are regulated, we must do really a lot of research and make the KYC, KYB, but for clients, and they unfortunately they don't understand and they don't like that it's not so simple way, and unfortunately it doesn't take one day. Even a lot of companies, they use a lot of new applications for check of individuals. They use also a lot of new companies which simplify this process, but still it takes a lot of time.
One final brief thought on that is, I think this is more blue sky thinking, but ultimately this is an area where the traditional financial system and payment system and blockchain could come together really nicely. We're actually proving your identity on the blockchain in a way that is transferable, obviously across the board, and would be utilized within all payment systems and payments providers. Could be a really nice way of bridging that in a logical and an efficient manner.
Very good. Well, we like blue sky thinking, so always pleased to hear about that. We are almost at the top of the hour, and so we're going to have to wrap up. I've really enjoyed this. I'm amazed at how much we covered in an hour. There is so much going on in payments, as I said at the start, and I think we've proved that and then some. It's always the topic that gets so much attention. Probably the sort of biggest area of discussion at things like FinTech Week and our global summit, which is part of that. So I know. We'll be covering that in April, and I'm sure plenty of times before then as well. Thank you so much to the panel for joining us today and for sharing their thoughts. Loads of great expertise, loads of fantastic insights there on a huge range of topics, as I say. So it's really been a great pleasure. Thank you all so much. This will be available on Catch Up, by the way, for anyone who joined us late or had to dip in and out. But I think that's it. I think that just leaves me to say goodbye. Thank you for joining, and thank you again to our panel.
Thanks.
Thank you.
Thank you very much. Bye-bye. Thank you.
Bye, everyone. Thank you.